Hey guys, Mike here. So finally we get a red day and break the streak. Whew, man, we were getting a little overstretched there, wasn't we? Yeah, and so no shocker there. Again, you know me, I like to keep things in perspective, so we will look at all that. There was, of course, something that brought the market down because it was green, if you didn't notice, and had a nice little reversal there. So we're going to talk about what that was. Again, it's something I never thought I would talk about in my life, that is for sure. I'll also go into what happened to Tesla if you didn't see it, because this is the one thing I don't mind move downs or move ups or anything else, but I hate pure market manipulation. I really can't stand it. And I'll show you exactly what happened in the timeline of what caused that big sell-off in Tesla today. But I do always like to keep you up to date on this kind of stuff when it comes to the economy, things like that, because it does affect us, and eventually it will affect the markets for sure. And you can see the one thing that's been talked about more than anything right now on Twitter, I swear, has to be the delinquency rates on credit card and how much credit card debt we have and stuff. And you can see, yes, delinquency rates are absolutely ticking up because credit card rates are higher than they've been in years, right? And people at certain income levels are getting crushed. That's just the way it is, unfortunately. But keep it in perspective here. When you look at this, obviously, yes, we're saving less. No crap, right? Inflation is a real thing. I know they keep saying inflation is coming down, but honestly, when I go to gas pumps in the grocery store and I see my electric bill every month with a heater, or actually, I'm just starting to use the heater, but it don't really seem like it's going down in those areas that really matter. And so I understand why people get frustrated when they hear people say, "Oh yeah, inflation is coming down." You're like, "Where?" Right? So it's tough. But then you look over here at credit card debt, right? And it is at an all-time high. But when you compare that to income, historically, it's nothing, right? And really, the things you got to pay attention to is, one, look at this right here. People are working more jobs, right? But again, what I always say, these people working multiple jobs, at least they can find the jobs, okay? Now, we are back at the level we were at from 2009 to 2020. So will we start going sideways now? That's the big question you got to pay attention to on this. The other thing is, but again, as long as people have jobs, doesn't matter. Now, looking at this one, some people call this a recession indicator. I've actually never seen it before, so I'll try to track it. But it's talking about temporary help services category, non-farm payrolls, right, in the thousands. And you can see it's been going down for a while now. And usually this happens. You've seen it happen right for the dot-com bubble. You saw it happen before the recession in 2008. You saw it happen right before 2020. And you're seeing the same thing now. And so we'll see. There's plenty of these indicators that seem to be either broken or maybe they'll finally play out. But it's just something else to be aware of. So if 2024 rolls around, we hit a recession, you're not going, "Whoa, wait a minute, what happened?" Because I like to be informed about this stuff, right? And look at this right here. This is our labor force. This is foreign-born labor force versus native-born. And look at the lines here. Which one do you think is native-born? Well, native-born is the one that's almost flat. It's increasing a little bit over the last 3 years, but look at that, foreign-born. And so that's going from 2020 up. Look at that right there. That's what I always tell you. I saw the Republican debate last night. They always say, I'm gonna take the military on the border, we're gonna shut it down, all this stuff. But you ever notice though, neither party, they run on this thing, but they never pass legislation that can fix the problem. And this is why, because they know, what do we have to have? The jobs those folks are willing to do, we are not willing to do it. Maybe you are. Put in the comments if you're willing to go out in those fields or go work in those kitchens and stuff. It's brutal, man. It's tough. It's tough work. Okay, I'm just telling you. And so the jobs they take on, we don't seem to want to do anymore. We're not, think about it. I heard you guys informed me, up there in the Midwest, whatever, those meat packing plants and all these other kind of plants, they bring in foreigners and actually build like little towns around them and houses to put them in and stuff because we won't do it. And I'm not going to do it. I don't blame you if you don't want to do it either. It's a terrible job. It really is. And it's a low pay, and they can pay them folks a lot less, right? But even if you were, I was going there, they still going to pay me a lot of money to do a horrible, dirty, nasty, filthy, disease-infested job. That's what it is. My wife her family owns chicken farms. They are disgusting and disease-infested, let me tell you. But, it is what it is. And you know who they have to hire to help them? They have to hire ex-cons. That's the only people they can get, or somebody from another country, immigrants. That's it. They ain't getting nobody else in there. They complain about it all the time. They ain't getting, like I say, it's a poor-paying job, and it's a hard job, right? And so, I always like when people rail on immigrants. I'm like, but we got to have it. We got to have immigration. I'm like anybody else. I want it to be legal, but unfortunately, our politicians, they'd rather run off this stuff because they can trigger us, right, than actually try to fix the problem with the legislation they need. And so just keep that in mind. You hear these idiots up there talking about it. Now, what caused the market to sell off with a quickness? It was that 30-year Treasury bond auction. It hit at 1 o'clock, and boom, what happened? It was not good. Demand was not good. It was actually like, I've read two different sources. One said the worst in 2 years. One said the worst in like 15 years or whatever as far as demand. And so, of course, when that happens, this is the cues. What immediately, it's going to sell off when you get a pop like that. 10-year popped up, and then you look at the dollar. You know, the dollar popped up, and the dollar just kept going for the rest of the day. And so when that happens, you know, you got to understand something very important, guys. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support, which is this whole rally, this mega rally with just jet fuel poured on it. The jet fuel is the yields going down very fast. That's the jet fuel, right? So when they come back up, what do we talk about? And again, I never thought I'd be talking about bond auctions. Did you? I read an article about that just the other day. It was like, I think I even put it in the members news brief this morning about how bond auctions are more important than other things that used to be really important in the market. But now we're sitting there going, what's going to happen on the bond auction? We're literally sitting there. I decided, I actually went out and decided, instead of listening to Jerome Powell and worried about bond auctions, I went out here and just drug like 200 pounds of like tree limbs and stuff to the road, because I had a feeling what was going to happen on the 30-year. I mean, no shocker that. And it is worrisome in a bigger picture sense, if we get in the market and all that for a second, but that people are kind of going, I don't think I want to buy your long-term debt right now. You know, that's kind of a worrisome thing. Hopefully it doesn't continue like that, but there's no reason for it not to, as the idiots in DC continue to run our debt through the roof and stuff. Now, if you look at the big picture here on the indexes, okay, and then we'll get to Tesla, what happened to it in just a minute. But if you look, obviously, big red candle, big red day, but that's after, what was it, 1, 2, 3, 4, 5, 6, 7, 8 up days. And so is this inverse head and shoulders still in play? Sure, it could be. You know, again, it'd fill those two gaps, it'd be a lot healthier for the market to move up like that. But is it going to happen? That's a whole nother story. Because understand, you see that big line it's sitting on? Well, that right there is that trend line. That trend line is way more important than that trend line. And so it is sitting at a major trend line right there, which could hold really big support for it. We'll have to see. You know, if it breaks that one, yeah, I think the inverse head and shoulders is definitely going to be in play for sure. But I'm not going to be surprised if we get a bounce at it, just because it has bounced many times before. But what did happen today was it immediately gapped up this morning, filled this RTH gap, so we'll take that out right there. And then we just started basically trading sideways on the S&P, which was the weaker of the two today, just because of the Mag 7 and semiconductors and stuff. But when you look at the Qs, you know, same thing. Big red candle, wiped out the last 2 days of gains. But what really happened was it got rejected once, 2, 3 times off the October high, broke the trend line that we had started in November, which is fine. I'm actually going to pull this other trend line out right here, that downward trend line that was resistant so much. It should become support now. And so again, it's another one. You got the S&P sitting near a major trend line. You got the Q sitting near a major trend line. Could this be an inverse head and shoulders? We'll have to see. I don't really like this as much as I do the S&P. But again, you know, in order for this to happen, and if you don't track this, make sure you put it on your chart. I've showed you this before. This is the Mag 7, right? You can use it in TradeView right here if you need to count. Links down the bottom. That's the Mag 7. That's how you get it, right? It's up at this trend line. It has sold off the last 3 times, actually 4 times. It hit this trend line right here. In order for the S&P or even the Qs to sell off in any kind of major way, I'm talking about 2, 3, 4%, the Mag 7 has to sell off, because that's what's been holding it up more than anything else. I've showed you the breadth and everything. It's the same old thing you saw happen in March of this year as well. And the other thing that has to happen is semiconductors, right? Here's the VanEck semiconductor ETF. What we talk about? You get this breakout. I said that trend line right above would be resistance. That's what happened. It hit it. But look at this. 1, 2, 3, a gap and a gap above. 4, 5, 6, 7. And that is, you know, it's red. That actually is a green candle today, because that's why it broke out. So 8 candles up. Like, yes, look to the left. That's not normal, okay? But that was a huge, obviously crazy rally up. We hit resistance. Now the other trend line, which was descending, will be support. If it can break back through that, then we're in business. If not, and the semis continue to rally and the Mag 7 continue to rally, you can forget about any hopes of any kind of pullback, okay? I'm just trying to be honest about that. Now, what is getting pulled back is IWM. Small caps are getting absolutely decimated. Even when the SPY and QQQ are green, IWM is down, what is it, like 5% in 6 days right now. And I mean, you see it ran once it ran that moving average, that trend line, boy, it was like over. And we pull up the volume profile, you see what happens when it gets in those volume gaps, man. And it's in one now with an RTH gap right below it as well. It filled one today, or was in the middle of it. And so if it continues to push down 165 right there, and looks to be support, if it continues to want to push down, but it's definitely overdue for a bounce. That is for sure. Now, Tesla. Here's what happened with Tesla today. This is stuff I don't like. Because I don't like short reports, things like that. So this comes out really early about how Tesla is the most shortest stock dollar-wise, which makes sense, right? It's only 3% of the float, but we're talking about $18.63 billion in shorts. That's a lot of money, okay, to be had. And so you want to make sure you cash in on that. Well, of course, what comes out right after that? Oh, look, downgrades. Sell Tesla stock, says analyst. It can drop 34%. So that hits in pre-market. Immediately, Tesla starts to sell off. After, and of course, this is after the short, it's not a short report, but after the fact that they have the most shorts as far as dollar-wise comes out. And of course, Tesla stock ends up sinking like a weight. And if we talked about that accumulation, whether it's cumulative distribution, well, they made sure it was distribution. So we end up sinking down past that trend line again, going into an RTH gap, which is a good thing. I actually believe, remember we talked about, where would you rather buy Tesla, at 235 or between like 200 and 212? Well, now we're right back down there in that war zone area. I believe we closed at like 209 or something like that today. Didn't quite fill this RTH gap right here, so we still got a little bit of waves down if it decides to move back down. But we're back down in there. And again, this is just one of those things, a pet peeve of mine. I can't stand it when the shorts manipulate down like they did. That's what this was. It's pure manipulation. So if you were setting in calls, you got really screwed. And that's what sucks more than anything else, right? Which I was not setting in calls. But, and again, I don't mind buying these levels, especially if it gets below 200 again. Hey, great, wonderful, all that good stuff. But that's what happened with Tesla. Now, what did we talk about yesterday when it comes to Disney and these long-term trend lines? Stock right here to watch out for earnings is Disney. This trend line on a logarithmic scale goes back to 1974. It's never broke it, right? We had it. You see on even the great financial crash, it did not break it, okay? 2020 crash, didn't even come down and touch it. And that's exactly where we're at leading into earnings. So this is going to be very interesting, again, to see if technicals play out. And the other technicals that are in its favor, it had a double bottom right there, right where the 2020 low was, and also in this zone where it's held support going all the way back to 2014. And as you can see, we got the huge bounce up, right? And so this right here, I think it closed over 90 for the day. It actually is overbought territory, which is weird to say for Disney because it hasn't been overbought. I can't remember, honestly. I didn't even look at the chart, but it's been a long time to say the least. But when you pull out, I mean, this stock, boy, oh boy. I mean, it has just been pummeled, right? It looks like PayPal's and Square's charts and all these other ones that have been beat down like this. And when we pull up the moving averages, you can see, again, above the 50, above the 100, and is right below the 200. If it can recapture the 200, that's good stuff. I'm expecting a rejection right there at the 200, but you never know. We'll see what happens. There is momentum behind this, but that is a big move for Disney. And I say this jokingly somewhat, and then not joking. I think Bob Iger, because of what I showed you in those charts, he could have got up on that desk, pulled his pants down, took a dump all over Mickey Mouse's face, and this stock was still going to go higher. That's just the way it is. Because Disney, I mean, they still have a lot of problems, right? Even though he's trying to turn it around. So, this was, to me, purely technical. That's exactly what this was. I mean, I'm even, when looking at this and some other charts, I'm even going to start a new channel in the Discord where I'm finding these stocks just in these long-term trend lines. And because Apple has one, I did a members video. I showed them all kinds of stocks that have these crazy lines that they just bounce. It don't matter what's going on with the company. Doesn't matter. They bounce. They make for either good swings, or if you do hold the stock, that's the time you load the boat on dollar cost averaging for sure. And so that's how important it is. But I at least wanted to show it to you in the follow-up that we gave yesterday. Now, another way to look at Apple here is, I'm going to put this trend line in here because this is a little different than what we were looking at, right? It broke out, but this is a trend line you can see the last two times. So you sold down, and now we're at it again. And you can just see 1, 2, 3, 4, 5, 6, 7, 8, 9. And you saw the last run up, right? It was like 1, 2, 3, 4, 5, 6, 7, 8. And I think we're at 9 candles today. And so we need to see, is it going to reject off this again and start pulling back? Again, the other trend line that it broke out of will be support now. Just keep that in mind. There's a different way to look at Apple. And again, if it sells off, then yes, you will get your pullback on that inverse head and shoulders on the S&P and the Qs. Now, pulling out and looking at it, as far as if it does break that trend line and go higher, where the draw on liquidity is going to be this RTH gap way up there, but also the fair value gap below it. So that is where it will draw to, and I think it'll absolutely close 190 pretty fast, I believe is what that level is. So just keep that in mind. Now, last one here is BABA. Again, this one's been selling off the other Chinese stocks after the pop. This will be the first time it tries to test this trend line. This was where it broke out of that channel finally after being in it for months. Will it hold? That's what we got to see. I have no faith because it's a Chinese stock, but usually you do get a bounce as long as there's no terrible, crazy news coming out of China. Now, as far as economic news, the only thing you got is more Fed speakers and the Michigan consumer sentiment. And since the market's been up, could be good. I really don't care. I could care less about Michigan consumer sentiment, to be honest with you. The Fed speakers, they've been all over the place. When Powell spoke today, again, I didn't watch it, thank God, because I think some more protesters came in there again. He had to leave, whatever. I can give the dude's speech myself. I don't need to really hear from him anymore because I wasted a lot of my time to put out on this channel watching that dude for, what, a year and a half now? And so, you know, they're kind of all over the place. Some are saying it's restrictive enough. Some are saying it's not. Some of them saying, oh, we've been fooled before in the past. I'm on the 70s when they thought they had inflation under control. But the good thing is with inflation, with oil tanking, if oil just, even if it stays where it's at now, but it still sells off more, oh, I mean, that's going to help inflation because that's what affects everything. Right, I told you that. It affects fertilizer prices, so it affects the food prices. The food has to get trucked over to the grocery stores. So that's what's affecting food pricing so much right now. And so, and that's what a lot of people are complaining about, right? And then, of course, prices at the pump, the everyday stuff, right? Prices with your energy at your house and things like that. So, you know, that would help a lot for sure. And I mean, I'm hoping for that because I'm tired of paying a lot for gas. And I don't know about you. Am I the only one that buys groceries and then you look in your trunk and you're like, what is that, like 12 bags? That's $150? Really? Am I the only one that does that sometimes? You're just dumbfounded of how little you're buying with what you're paying versus what it used to be, right? I mean, maybe I'm the only one. Let me know in the comments, guys. So anyway, hope you guys got some out of it. Please hit that like and subscribe button. Really appreciate it. If you want to join over the membership, hit that link down the bottom, less than the McDonald's combo, and I will see you guys tomorrow to wrap up the week.